Hello, and welcome to the Exponential Growth Podcast, powered by Analyst Investors. I'm your host, David Olivencia, co-founder of Analyst Investors, and a passionate advocate for leveraging innovation and technology to drive success. In this podcast, we'll dive into the strategies that top leaders, investors, and entrepreneurs are using to navigate and thrive in this era of accelerating technological change. Whether you're looking to lead more effectively, make smarter investments, or understand how to harness disruptive technologies for exponential growth, this podcast is for you. Each episode will feature conversations with visionary thinkers, industry pioneers, and innovative leaders who are redefining what's possible in today's rapidly evolving world. So if you're ready to start and stay ahead of this curve, let's get started. This is Exponential Growth. All right, everyone. Well, hey, welcome to another edition of the Exponential Growth Podcast. Today we have a special guest, a leader who we've invested in from the Analyst Investor side, and also our fund, the Analyst Ventures Fund, invested in this amazing leader. Who has an interesting background of some consulting. Also big in the AI tech, and we'll talk more about his amazing background. And actually, it was just recently featured in the Wall Street Journal, so we'll also dive into that a bit. Welcome to the podcast, Francisco Martin Rayo, CEO of Helios AI. Welcome, Francisco.
Thanks so much, David. It's great to be here.
All right, well, excellent. Well, a lot of things to chop up. AI is hot, and you guys are doing some amazing things in this space that we're going to let our audience know about. And then we'll also jump into that Wall Street Journal article. But let's start with you, just to give our listeners out there, and this is a broad audience, right? We have some university students, some professionals, some people, CEOs, board members. It's pretty diverse audience. But let's ground it. Just give a perspective on you and your background. It's pretty amazing and how the journey and where you're at today.
Yeah, thanks. I came from a background of I did finance early in my career for hedge fund advisory, and then kind of a distress fund. Moved into consulting, was at BCG for a while, loved it, did a lot of digital transformations there, and then kind of got poached from there to go run a couple AI businesses, and then started Helios. But the interesting part there is very early on in my career, I was importing avocados from Mexico. And so I had this kind of weird background of a lot of technology, AI and ag, which is what led me to start Helios a few years ago.
Yeah. So, and by the way, like these avocados, they're amazing. They're like one of the healthiest foods on the planet. Like
it's a superfood.
I love them too, by the way. I love them, but yeah, no, go ahead. You're going to say.
No, it's a superfood. I mean, it's a wonderful. It was a very good business back then. I know it's changed a lot, obviously, over the last 15 years. But the margins, getting a refrigerated trailer from Michoacan into Atlanta, Georgia, is where I used to be based, was pretty remarkable. Good business.
Yeah, and then also I saw undergraduate, I believe Wharton, and then Harvard and Kennedy School. Is that right?
Yeah. As my dad likes to say, I'm overeducated at this point, so hard to find a job. That's why I started a company.
Oh, yeah, that's why you had to be a CEO. All right. Well, hey, so then so you were talking about you did some startups in the AI space, and you launched this company Helios AI, and you have an interesting story of how and why you started it and how you got connected. A little bit of the avocado story is thrown in there, but maybe let's double click on that. How did you start this thing? You have an amazing team and co-founder. Let our listeners get a little bit more.
Yeah, I mean, Eden Janilar is my co-founder. We've known each other for 14 years now. We'd worked together before. She has also a really interesting background. So she was a senior AI/ML engineer at Google. She won the Abby Award, had also owned a bunch of restaurants earlier in her career. And so she also had this kind of unique or weird background with food and tech. And our hypothesis was we felt that we had really kind of bungled climate change as a society. We mean that apolitically, but we felt, it's over. You need to start adapting to living in a world that is 2 to 3 degrees hotter on average, right? And that average means that Some places are a lot hotter, some places are colder, but it's going to wreak havoc on your global food supply chains. That was kind of the really negative hypothesis we had.
Yeah.
More optimistically, based on what we were seeing and the changes we were seeing in technology, we felt that we could build a platform that could predict all of these disruptions and have a really positive impact on your bottom line, a positive impact getting ahead of those disruptions, and even a positive impact on food security. And that was really the ethos for starting Helios, and that's what we do today, right? At our core, we predict the price and climate risk of agricultural commodities. I mean, we do it for 77 commodities across 90 countries, more than anyone ever. The platform we built has predicted 90% of all ag disruptions that have occurred over the last 10 years, which is really extraordinary, right? And I give a lot of kudos, all the kudos to the team. But as we talk about what's happening in AI, we can really talk about how is it that that's possible today, because we couldn't have built this company 2 years ago, right? Certainly not 5 years ago, and been this successful in terms of the outcome of what the platform is doing.
So as an example, like maybe help our listeners understand. So if I'm like a big purchaser of food or avocados or fruit or whatever like that, it could be any of the big, Target, Walmart, any of those. I'm not saying any of them are your customers, but it could be any of those big
Some of them
ones.
are, yeah.
Okay. So they have to make decisions about how much, when, where, and those decisions have those type of decisions have a huge impact on how much they make, how much they lose, how profitable they are, and all that kind of stuff. So what they need to do, they need an edge. They need to, what do I need to do? What information can I have to make the best, most efficient decision that's going to, drive profitability? And
Yeah.
they're looking for tools. And this is this where Helios fits in? And what else, if any, does more does Helios do?
I mean, 1,000%, right? I mean, we always say this. We're super focused on protecting and improving your margins. That is why we exist. We are built for procurement teams with procurement teams. A good example is, one of our customers, UK based, they buy about 1 billion pounds, so 1.5 billion USD of produce globally every year. Before the war started with Iran, he told us that those 2 months had been the hardest 2 months of his professional career. And he's been doing this for 15 years because of the level of disruptions that were happening all around the world across the supply chain. And, at that point, right, this is again before the war, 90% of that was climate based. And so what's interesting for us is you're getting into a world where the way it used to work is you would develop these relationships with your long-term suppliers, you would figure out what the price was, and you know that you'd contract things out 1 or 2 years, and you know that you're going to get your stuff most of the time. Every now and then there would be a disruption, you'd find somewhere else to do it. You're now having 3 times the number of disruptions than you've had 10 years ago. And so the job has changed completely. You really need new tools to help you predict these disruptions, mitigate the impact that these disruptions, get ahead of it. That's why we exist.
And so that's a great segue. So, I don't know, 3 weeks ago ish, I'm reading the Wall Street Journal and I see this article. I'm like, wow, this is insightful. And then I look at the author. I said, wait a second, I know that guy. I invested in this guy. And I said, no, this is great. So how did and so millions of viewers and in the Wall Street Journal, what was the impetus of writing the article? Maybe how did it get positioned in there? And then what kind of buzz have you got after kind of being featured in the Wall Street Journal?
Yeah, I mean, it's been great for the company, right? We're really excited about the opportunity. We work with hedge funds in addition to these procurement teams, commodity hedge funds. One of our customers had asked us, they said, you guys have a really unique view into how the ongoing crisis is going to impact food prices and the food supply. Could you do a research piece for us? We're an AI company. We have a multi-agent platform. And so we started asking questions in the natural language of our platform. Hey, where do we think this is going to go? We put in a bunch of this type of analysis and kind of built a 21-page analysis on what is the impact of the Iran war on food prices. And I'll spend a little bit of time on this because it impacts everyone. And so if you think about it, March 4th, the Strait of Hormuz is closed. March 18th, ballistic missiles hit the one of the natural gas plant in Qatar takes out 17% of their capacity, at least for the next 3 to 5 years. What's happened since is about 40% of the oil that goes through the Strait of Hormuz has found alternative routes to get out. The natural gas that is the essence, right, and the main ingredient for urea, right, the fertilizer that basically powers food around the world, none of that has been able to get out. And so if you're Australia, you were planting in March and April. Now, you only had 15% of the fertilizer that you needed for your wheat crop. 70% of the fertilizer you get comes from the Strait of Hormuz. You didn't get that fertilizer. And the hard part about agriculture is if you don't plant it at the time where you need to plant it, you don't get to go back and fix it. And
Yeah.
so we expect yields and production in Australia to go down. They do a lot of, winter high protein wheat. That's going to impact prices for Kansas wheat, right? A good example, right? So you can go long Kansas wheat if you're listening to this podcast. I don't know when, right? Don't come back and sue us.
Not financial advice,
Not
just
financial advice, right? But that is the expectation. And so we knew that it was going to have all of these very negative effects globally, and no one was really talking about it. Everybody was really focused on kind of the oil crisis, the energy crisis. And then they said, well, when the ceasefire comes back on, things will go back normal. The problem with a ceasefire is even if there's a ceasefire this Monday, right? We know they're meeting over the weekend. One, you got to demine the strait. And Iran has said this publicly. They don't remember where they put the mines. Two, insurance rates have to go down. So it becomes economic again to transport things through the strait. Three, you got to get captains who are crazy enough to start transporting again.
Yeah.
Once those three things happen, what's the first thing you're going to transport? You're going to transport oil, because you could get a barrel of oil cash in Singapore, get paid $185 to $200 a barrel, right? Not what you're seeing in Brent futures, cash. So you're going to transport all of that first. And then eventually you're going to go back and start transporting the fertilizer, which, as you'll recall, not as much fertilizer as you could before because there's been these negative impacts in the Ras Laffan plant.
Yeah.
All of this means that the rest of the world that depends on fertilizer, especially the global south, is not going to get the fertilizer they need at the price they need. And so that was the point we were making in the Wall Street Journal piece, right? That, to us, it is this looming crisis that no one was talking about because everybody was so focused, I mean, understandably, on the negotiations and the price of oil, but you can't eat oil, right? You do eat wheat. And just the corollary there is, if you do some analysis of kind of the Arab Spring, right, 15 years ago now, 2010, a lot of that was driven by food scarcity, food insecurity. And so, the global food system is so interconnected today that we just wanted to shine a light on some of the impacts that you were going to see globally, for people to pay attention. And it's nice to see, and we're not saying we're the only reason this has changed, but now you're seeing, I think, a lot more people talking about this, a lot more publications talking about the looming food crisis.
And then any interesting things or that's happened kind of post that, you found amazing? Like the article comes out, I'm sure, maybe
we had a lot
members,
of
friends,
we had a lot of
media,
people reach out. We had a couple of government agencies that we can't talk about reach out, for us to make that analysis available, right? And we don't work with governments. We may at some point, right? But we're a private sector company. That's where we focus. And we were just happy to be able to make that analysis available, obviously more broadly, but also to some of the people who are closer to these decisions, obviously domestically and abroad.
It's great. No, it's great. And it's like I said, I want to, as obviously an investor, a supporter of what you guys are doing and a big believer what you guys are doing, it was refreshing, and it kind of pulls it together. Okay. So Exponential Growth Podcast, we like to talk about, trends, investments, leadership. Let's talk about trends. So obviously AI is a big one. You're in the throes of it. But what do you see, to our listeners out there, what you were to tell them, hey, you really need to double down on these 2-3 big exponential trends. What are they, and what should they be paying attention to?
Yeah. We had an offsite in December. We have a global team. We're not very big, right? But we're big enough to be global. We brought everybody into New York. And as part of the offsite, we said, all right, what are all the things we would love to build in 2026, right? A bunch of features, that customers had been asking for, we had been wanting to do. We're going to finalize our entire year's worth of features at the end of April. So we are 3 times faster today than we were even in December. And I think the biggest difference for us is, Claude has really been a game changer. I mean, it is just so much better than any other tool out there. And I would encourage, right, anyone who's listening, whether you're an individual contributor, whether you're a CEO, you really got to push your teams to start using it aggressively, right? Use Claude Code as aggressively as you possibly can, even for people who aren't technical in nature. Because from a development lifecycle perspective, it is just extraordinary. So that's from a coding perspective. From a go-to-market perspective, I have spent a lot of time in my career doing decks. I make pretty good, PowerPoints. I had to go pitch a completely new industry, a new person I'd never pitched before. I uploaded kind of a generic sales deck that we have for a completely different industry. Asked again, Claude, right? I said, hey, can you help me create a new pitch deck? And tell me what I should talk about. And it built the slides. And this wasn't possible 2 months ago. And slides are excellent. The reason I'm giving that example is because now for all of our account executives, we're able to do a level of customization, right, with Claude and Gemini primarily, that would have been completely impossible a few months ago. And so you're able not just to pitch people in an extremely custom fashion, right, doing all of the research for all their 10Qs, 10Ks, CEO quotes, et cetera.
Yeah.
But then if we look at our product specifically, the biggest change that you've seen and why you see the death of SaaS, the hardest part being a SaaS CEO is you have a dashboard, and that is typically you're driving everybody to engage with your dashboard. And you can put a ton of stuff on the dashboard so it's more complete and more people can use it. And then you end up with something like Reuters, right, which people hate to use. It's got so many functions and it's extremely complicated. Everybody's kind of unhappy. Or you do something extremely simplistic that is very easy to use, but it has limited functionality, and then your TAM is a lot smaller. And so that was always the balance as a SaaS CEO or product leader that you had to really pay attention to. That's completely changed. The beauty of generative AI today, and this is independent of what frontier model you're using, is you can do custom analysis and custom insights at scale. So if you have 1,000 customers, each of them can get custom insights in a way that would have been impossible 6 months ago. So those are I think, the trends that we see that are most exciting. The medium-term trend, and I think this is what's most exciting, and this will be most transformational for work, is in the next 3 to 5 years, every single person in the American workforce is going to have a co-pilot that is working with them.
Right? Totally. At least, you might have multiple co-pilots, but you can have one totally for yourself, but you can have a coach, who's maybe a sub co-pilot, right? And totally.
And at least, but I think the interesting part is you're going to have that main touch point for not 100% of the work you do, I don't think, right? But maybe 70, 80% of it. And so if you're a procurement analyst, you would have gone to 10 different dashboards before. All right, I've got my SAP dashboard, I got my invoices, I got my email, I've got whatever. You probably 80% of that just gets collapsed into your co-pilot, who is now doing most analysis. That will have an impact on jobs. We can talk about that. But as a SaaS company, then how do you differentiate yourself? That means that in the future, one, you have to make sure you have really good proprietary insights, which we do. But then the way you think about delivery is you end up building an organization that can plug into whatever the right co-pilot, whatever frontier model wins. There'll be 2 or 3 of them. And that's how you end up growing, and that's how you end up going to market. Because if you keep forcing people, well, I've got this great dashboard, but it's not integrated with OpenAI or Gemini or Claude, good luck, right? And that is totally different than the way it used to be. I think you did this cool podcast, I think, on agent to agent selling. And that's probably where you end up, right? You build an agent whose job it is to go sell to all the other agents. And there are even, I'm not sure, David, if you've seen this in your own life professionally, but there are moments where I'm having a meeting or a conversation internally or externally that I think to myself, this conversation could just be entirely had by agents. This
Mhm.
the reason this, not this podcast, right, but this particular
Yeah.
meeting or something is still happening, even sometimes a sales pitch or an RFP, is purely friction. It's not because it's not technically possible to do it in a much more efficient way. And that's pretty new. And
Yeah.
that's probably where we'll end up.
Yeah. No, it's I like so to the listeners, right? I mean, and here's so the listeners out there, right? Here's a CEO who's in AI in a deep way. They're the co-founder, was AI at Google, right? So they live it, breathe it, leverage it, and you've seen how it's exponentially helped them put out new releases and the this whole area of co-pilots and agent to agent transacting and a workforce of agents that have specific roles. I mean, this is you if you're not thinking in this way, you need to be thinking about this way fast. And to, Francisco, to your point, I mean, think about you're pitching, you have your sales rep pitching a new industry or whatever, and you're going to wow that potential customer, right? And so your competitors, they're going to need to up their game, like and so there's going to be this continuous competition that's going to, and the weak ones will likely not make it, right? The ones who aren't using AI, they're not going to make it out of here. So it's going to create this, what I say, this continued exponential growth there. So yeah, this is for the listeners out there, just reinforcing that. So amazing trends there, and we're gonna keep posted on them. Um, let's chat on investments. So there's a couple angles we want to chat on investments, right? And you've got some background in it, right? So doing, would love to maybe dig a little bit deeper there. But so well, let's talk with your customers out there, right? They're making bets on where they how many avocados do I buy? Do I buy them from Mexico or do I buy them from, I guess, California? Maybe there might be other,
Yep.
and maybe they're, as an
Yeah,
example, right?
Peru, Israel. Yeah,
Peru, yeah, yeah, yeah.
they're all
So,
over now.
but they're making these. How in this time of exponential growth change, how should they be thinking about just investments, placing bets? What should they do?
I think for procurement managers, there's two things you worry about. The thing you worry about the most is availability, right? Are you not going to have the ingredient that you need or the commodity that you need on your shelf? Kraft is a good example, right? We don't work with them. This is public information. A few years ago, all of their suppliers that were supposed to source tomatoes from Spain, Spain had a horrible drought, terrible tomato crop. They didn't get any tomatoes. They couldn't put any ketchup on the shelf. Unilever did a better job of mitigating that, and they had ketchup on the shelf. So you end up buying Unilever ketchup instead of Kraft ketchup because your product isn't there. And so that's your biggest fear. That's what you worry about the most. And you're constantly trying to make sure at some point it doesn't matter what price you're paying to make sure that your product is on the shelf. And then you eat some of those costs, you pass through some of those costs to consumers and middlemen, et cetera. Then you worry about margins. And you spend most of the time worried about margins and trying to optimize for, quality and value. But as you have more and more of these disruptions, you actually have to worry more about availability than ever before. And that requires you to make investments from a relationship perspective, from a secondary or tertiary supplier perspective. It is more expensive than ever before to ensure that you have that constant supply and resiliency in your supply chain in a way that you would have taken for granted before. But when we first started the company, we pitched a fast food operator, the company that owns the fast food restaurants. They sell a lot of French fries. And the head of procurement told us, listen, we're the top of the food chain. We're always going to get our potatoes. 2 years later, we now work with them and they said, well, we don't actually always get our potatoes now because of the disruptions. And they're the very top of the food chain. So things have changed. I mean, that you really have to diversify your supply chain from a procurement standpoint. Yeah.
Wow. Yeah. No, and it's you would think that job got easier, but it's and you got more information to do it, but it's still more challenging. Got more tools and information. It's still just as challenging. So that's excellent. Now, you're a startup founder, and this is like I think a lot of people I mean, and I deal with thousands of them, and I've invested in almost 100 now. Startup founders need to make allocation of time, allocation of capital. How do you how do you think about investing time, resources, capital in an efficient way? And with all this change, AI, you have to make bets on AI platforms, you have to make bets on tokens, you have to how are you thinking about investing in with all this exponential change going on?
It's a really hard balance. One of the quotes that I have found most insightful from Paul Graham, I think the founder of YC, Y Combinator, he had said, what he sees as the closest correlation to success as a startup is how quickly they're pushing out new features and new products, right? And he said this, I don't know, 15 or 20 years ago, right? Way before any of the AI stuff was happening. And the reason in my mind that helped so much is because when you're a startup, you need to be able to differentiate yourself in the market. And the way we do that as a software company, as an AI company, is by having a better product than anybody else on the market. And the way we do that is by constantly pushing out new and better features than anyone else at speed. And so that's where, especially initially, we put in, from our inception all the way to our seed raise, right? And you guys were part of the seed, which we're really grateful and excited for. That we would really focus on R&D. And it was only after the seed that we said, all right, now we can start. Now we've got the best product. We'd start really building out that go to market. But some of the bets you're going to make are wrong. You're not going to have a perfect score, anyone. And so the question is, how quickly can you learn from those mistakes and pivot away from them? Because that's often what will kill a startup, especially the most precious resource you have isn't capital, it's time. And I think that is incredibly important for every founder to understand. If you take too long, you run out of cash. If you take too long, you're not exciting. If you take too long, customers will fear. If you take too long, your competitors will come up and beat you. One of the things that's been most interesting about the environment where we are, I was at the Fortune CEO offsite, right? And I don't know why we got invited. We were the smallest company there. Everybody else is, the CEOs and SVPs of these Fortune 500 companies. Grateful to be there, right? But we were much, much, much smaller than everybody else. And these are the folks that I used to work with when I was at BCG doing digital transformations. And I had never heard this size of company and this level of leadership move at that speed. They didn't mind losing or wasting a lot of money on new initiatives. They didn't mind testing new things. They didn't mind pushing their teams to work 60, 80-hour weeks. They were pushing new features and new tests every month. These are companies that used to do things on a per quarter or like semi-annual basis.
Yeah.
And so that means as a startup, you have even less time than before because your biggest competitors are going to start adding those features.
Yeah, no, amazing. And when you think about, and you've got, you also have some history in, hedge funds and things like that. What just general, you know, maybe just to our audience out there, you've got, remember, you got this hedge fund background, you're a startup founder, you invest, just general thoughts on investing in this time of craziness, not investment advice, but just how just your lens on it. What would you say to them?
It's what's interesting about the cycle that we're currently in. I mean, over the last 6 months, you've seen gold, bonds, and equities, right, are much more tightly correlated than you've seen historically. With everything that's happening in the United States, is there still a flight to safety? Well, not if you're outside the United States, right? Because you have that currency depreciation. So even if our equity markets outperformed everybody else's, you still lost out on currency depreciation. And so it feels, at least in my career, like this is one of the hardest times to place longer term bets. In terms of the trends that we see, AI is completely revolutionary, right? And all of its forms. And if you don't want to bet on the frontier models, they're all private. I'm sure, at least two of them will IPO this year. Bet on the industries that are going to benefit the most from these frontier models, right? And I think there are certain places that in my mind you're only going to have positive outcomes, almost only from artificial intelligence, right? That's education, agriculture, healthcare. But banking to some degree, right?
Yeah.
And then
Yeah.
there's a bunch of other industries that are going to have a much tougher time because of artificial intelligence. And so I would almost, as you look across your portfolio, make the bets in the places that are going to benefit the most from the ongoing technological change, and don't assume that it's technological change that isn't going to impact your industry. There isn't a single industry that it won't be impacted by this.
Totally.
Yeah.
Totally. Yeah, every industry. Yeah, no, I think that's a good way to look at it. I also look at, which has which, have the most exposure, to AI disruption, right? I mean, you saw a lot with software stuff that was out there, and I think a little bit overblown, but yeah, and it just and the volatility and how rapidly it happens, right? It's really interesting there.
Well, and
Uh,
the big question, David, right, is, I mean, we've seen the founder of Thoma Bravo,
yeah,
Orlando, right, Bravo.
yeah,
He's been out there very publicly saying, the workflows that I mean, he's a big SaaS investor, the workflows that his company sees, his portfolio companies, that's proprietary data. And that's really hard to do. And I think that today is probably correct. But in the medium term, right, those 3 to 5 years, most of those jobs will have disappeared as they stand, right? Doesn't mean all the jobs are disappearing, but all of the jobs will have changed. And then are those workflows still really helpful? What's the real value of your ERP if, you're now in an agentic to agentic plus a human at some point workflow, which is completely different than the workflow that the company is based on today and has been doing for the last 10 to 20 years. I don't know, right? Orlando Bravo is a billionaire who's made very good bets before. But I don't know if that's true, where
yeah.
you expect that these workflows are proprietary enough to serve as a decent moat for all of the changes you're seeing in the way people are working and the way people will work.
Yeah. Yeah. I think people are grossly, well, this is my personal opinion, grossly under appreciating is maybe the right word, like this impact that agent to agent work and an agent workforce, and these there's a lot of talk about the individual founder with just a team of agents, right, that are out there building and competing and driving. I think, and the speed at which that stuff can get spun up and disrupt, I think people are grossly underestimating how that's going to happen, right? Because we're humans, we tend to think in for thousands of years, right? Just very linearly. This is why I have the podcast, right? Very linearly thinking of change. And I think we'll see. Maybe I don't think I'm wrong, but we'll see. We'll see what happens. All right. Last point is leadership. So, any thoughts to our listeners out there? How do you? And you've got various leadership experiences, obviously, in your leading. So, a lot of you got agents, got tech, you got volatile markets, you got think. How do you how do you lead? How do you lead? What advice do you give to
Yeah.
our folks on just leadership?
I think you need to be clear about what the expected outcomes are for everyone. I think that really helps to level set those conversations. Um, and you want to be, as much as you can, I mean, always empathetic to the human, right? Going through some of these changes. One of the things that we've changed is anyone who comes in and works at Helios works extremely hard, period. And we weren't exactly clear enough about that in our earlier interview processes. And so we had a couple of hires that came in and said, you work every weekend. We said, yeah, of course we work every weekend. We thought you knew that. What is this, weekend idea? And we can talk about how effective that is or isn't, but we're a startup and
Yeah.
we were
Yeah.
successful, and so we'll keep doing that for a while. And we ended up parting ways, and we were empathetic, and we took care of him, and we helped him get placed at another job. But going forward, we really landed that in our interviews, and we've asked our more recent hires, hey, do we feel like we did a good job of explaining to you how hard this was going to be? And they've said, absolutely. Like, this is very hard, and I know exactly what it was going to be like. And so setting those expectations has been really helpful. And then everybody in the company, even what is historically considered non-technical people, uses artificial intelligence. And there was kind of a big barrier for the non-technical folks to get really comfortable with it. And I think part of that is the technology has now improved so dramatically that that makes it a lot easier. But we created one, the expectation was set, right? This is the way we're going to do work, and so we need you. But we also created as many safe spaces and almost buddy programs and all that as possible, so that they could ask what they felt were really dumb questions and go through their own processes and their own workflows and all that. Because I think for the engineers and the data scientists and all that on our team, they'll do mastermind sessions, and they'll show off their code and they'll help each other. And that's where you've seen AI grow the fastest. But if you're an AE or a product owner or a CEO, right, you don't have a group of other, AEs who are really good at AI who can teach you, and you don't have these master classes and all that stuff. And so we basically brought both of those parts, the non-technical and technical parts, together and said, all right, non-technical folks, we are now going to make you as technical as possible as you need to be for your new role, because it is a new role. And that has been really effective.
Yeah, I think, I agree with those. I think as a leader, humans in general don't like change, right? And if if you're in a big organization and you've been doing things roughly the same way for 5 years, you have the same meetings, and those kind of ongoing demands don't stop. And then on top of that, you're saying, hey, you got to start AI in things, right? I think there's some people that I don't think it's like they feel like it's just going to take their job or anything like that. I think just some of it is just like they're exhausted just from their general daily work. And now you're throwing another 2 or 3 hours. I got to write prompts. I got to test it. And then I got to implement whatever AI is telling me to do to be improved on top of everything, And so it takes, to your point, it takes real leadership, and because you're really driving you got to drive this culture there. And and it's not easy, right? It's like it is totally not easy, but it's very, very much warranted. And I totally agree with you there, Francisco.
And David, the other part that we've heard a lot, I mean, we work in a legacy industry, right? We say that with a lot of love and respect for it, but ag and procurement is a legacy part of the industry, right? We're not working with kind of CIO departments. We've often heard, well, I tried ChatGPT 6 months ago and it was bad, so I haven't tried it again. And that's fair, because if you tried a technology prior to AI 6 months ago, the technology would not have changed enough in 6 months to say, trust me, it is now dramatically different. A good example, our head of product just came back from maternity leave. She's been with us since the very beginning. She's an absolute rock star. And, first week and a half back, I said, hey, what's the biggest change? She goes, I am just so shocked by how much technology has changed. I mean, you can do incredible things. We have a Slack channel that we're looking at all of our sales calls. It's obviously they're all transcribed, they're analyzed in real time, and then they're fed into a parking lot of product features. And so you're literally every day, right? In real time, you're seeing, well, what are customers asking for? What's working best? What's not working? It's this incredible set of data. The way it would have worked before is, you would have had your AE, writing down that conversation. And then at some point they had to put the notes in. Someone has to read the notes. You do a summary, you do the summary, there's biases, all automated. Yeah. And so I can look in real time at our Slack channel every day and see oh, that's interesting. Here's what people are asking for. Here's what landed. Here's what didn't land. Think of how much more efficient we are.
Totally. And to your point, the product features, you can then have another set of agents that are looking at those, prioritizing those, building those. You could have a customer, customer representative agents that can, then give you feedback on the products, right? And you just keep, it's like this, going the agent to agent, just kind of building this stuff out. No, I wake up every day very much like yourself, just excited about all this amazing opportunities. So look, I know, Francisco, you got a lot of things going on. Thank you for jumping on the podcast. How do folks stay connected with you and all the great things you're doing at Helios?
Yeah, just Google Helios AI. Well, the first thing that pops up, send me an email. It's just F for Francisco at helios.sc for supply chain. Would love to hear from folks, and always happy to chat.
All right, excellent. Well, hey, continued success to you. Thanks for jumping on. We'll be in touch.
Thanks so much.